The market's down almost 2% on the week. Unless the NSE is able to post a gain of over 2%, it seems it's going to be another week in the red for the markets.
Yes, Samantha, I think what you're basically seeing is that the tightening policy has led to what you'd call a high interest rate environment, and this is really not favorable for equities. So basically what you're seeing is a general sell-off on the equities, and most people are preferring to hold cash. Cash is very rewarding. Anybody who is holding cash is enjoying yields of 20% upwards. And so I think it's not good for equities as far as local factors are concerned. Yeah.
It seems to be a bit of a defensive bias, which is pretty much factored in at this point in time. Which stocks do you see benefiting from this?
Well, I think what we're basically witnessing is increasingly the bids that are being shown to us are focused, or rather concentrated on stocks which I would call defensive, like Nation Media, East African Breweries, Scan Group, Athi River Mining. These are stocks that are very closely held, and blocks are very difficult to come by. So I think what investors are doing here, they're becoming very selective and just picking up blocks which would otherwise be very, very difficult to accumulate.
Interesting also that media group Nation Media has been receiving some attention as of late. Some are pricing in increased advertising spend in the election year, but on the other hand, wouldn't you assume that as the economy is expected to slow down, that companies will cut back on marketing and advertising spend?
Yeah, it's a bit of an irony there, because on one hand, you have the general election coming up. This is the leading company on the media space, and is expected to benefit the most from the advertising that will be happening, especially from the political parties. On the other hand, with the economic slowdown, then you expect one of the first things to be cut down is marketing budget. But so far so good, and the numbers that we've seen even from other companies in the same space like Scan Group, they've been pretty encouraging.
Looking at their move into a digital, possibly they're looking to form a JV with Royal Media Services. They of course run Citizen TV. What will this mean for Nation Media Group if they are awarded the license for digital TV?
Assuming this tender is successful, I think then you're seeing a potential new revenue stream coming in, and this is a positive development for them. However, I don't see this coming without some challenges. For example, I see other players in the same space feeling that the playing field is no longer level because they will be leasing out digital signals to their competitors, and you just wonder how fair that will be. Then there's also the issue of capacity. I don't know whether they will have the capacity to roll out a digital network across the country unless there's possibly another strategic investor who would come in later and just help them to do that.
So a lot of concerns also around the cost of the infrastructure. They'll have to foot that bill. Just let's look at the stock price. It's at 146 shillings. It's not as it hasn't been as punished as we see in the NSE 20. It's down around 9% this year. Pretty much a huge sell-off between June and September. It's been caught within a trading range at this point in time. What type of upside potential are you seeing for Nation Media?
I think I don't see much upside potential. I only see it not taking much of the battering that the rest of the market will be possibly facing because it's a very, very rare stock to have in your portfolio, and anybody holding it will find it very difficult to release it to anyone else. So I don't see supply streaming in to the market unless people are willing to pay a premium for it.
Yeah, let's move on to the banking sector. I see NIC Bank, one of your favorite banking stocks. Results out of that bank, 29% increase there in pre-tax profits. Also looking to diversify out of Kenya, given all the economic headwinds that we see, looking to move into Uganda. Just give us your take on the numbers that we saw there and the investment case for NIC.
Samantha, I must say the numbers are pretty impressive, given Q3 was probably the most challenging quarter of what we've seen being reported so far. And that was some impressive numbers. Some of the positives that I take from this is that right now NIC Bank has the lowest cost-to-income ratio of about 43% in the sector. It's overtaken Standard Chartered Bank. We're also seeing that revenues are growing much faster than operating expenditure. On the concerns, my concern basically is the balance sheet. It seems to be fully utilized in terms of its potential. It's thinly capitalized, and I think possibilities of raising capital are very, very possible. I think the moment the market conditions improve, probably this is one of the stocks that you should see some capital raising. In terms of valuation, I think it's very attractive, probably one of the most attractive stocks right now. With we're looking at an ROE of about 25%, and with a PE that is very low, about 5 times, price to book of just about one times, with a return on asset of about 3%. Pretty impressive.